Hey, welcome everybody back to the Four Star Wealth Today's Market Explained podcast. And today's an interview episode where we're interviewing one of the fascinating people in the financing world and the investment world. And today we have Leo Canal, and Leo is the founder of Seven Figures Funding. And Leo will tell us all about that. He's a renowned startup business funding expert. You're mentioned on all the sites, Trustpilot, Yelp, Amazon, as a caring, experienced, educated business and finance expert, helping people find startup capital. So, Leo, welcome to today's Market Explained.
Thanks, Brian. Excited to be here and share some value with a great audience and everyone out there who's got entrepreneurial endeavors, pursuits, or wants to jump into that field.
Excellent. So we talked a little bit earlier that I've been involved in startup funding and was an angel investor, formerly in an angel group for about 10 years, still have a lot of angel investments and doing future angel investments as well. It's very hard to get funding. So tell us a little bit about the process and how people get funding, and then what you bring to the table to help.
Yeah, great question. No question about it. Getting funding has never been an easy job. However, I would say in the last 12 to 18 months, with disruptions and pullbacks in stock market pricing and so many tech companies, having some struggles, letting go of people, it seems more than in the last several years that getting angel investment has become more difficult, and qualifying for some VC funds, regardless of if you're in the seed round or you're trying to get to the Series A, B, C, et cetera, like it's definitely gotten more difficult. And so if you guys, and I'm sure a lot of the audience has seen, shows like Shark Tank and some of these other shows, but what are the common questions that they ask? And that's what, every investor wants to know before they put money. Everybody wants to, have that future unicorn investment. So you have to put yourself in the mindset of an investor and why they would want to give you capital. They want you to have the potential to become that next unicorn. And here in Utah, where I'm located, we're in an area called Silicon Slopes that has a number of different unicorns. But the thing that is kind of a common denominator among those who are securing funding right now is they don't just have an idea. They don't just have an application and maybe a few users. They actually have sales, right? If you're watching Shark Tank, what are they always asking those entrepreneurs? They're saying, hey, what are your sales? Do we have proof of concept? And that, I think, is where the focus has to start. Yes, you actually will be a much better candidate to get that seed round of funding or the next round when you have real sales. You don't have to be profitable per se. You don't have to have everything figured out and have your team all dialed in. But if you have sales, you have some traction, you have some proof of concept that your product or your software as a service or whatever it is that you're offering to the marketplace actually has, evidence that the market wants it. And I think that's a good place to start.
So having sales is like other people agreeing with you. Hey, yeah, we like this thing and we're going to pay money for it. Right?
Exactly right. You've got some sales. Hopefully, it's above six figures. You've got some customers, some clients who are using your product, finding value in it. And then, there are always exceptions. If it is some kind of application or software and you've got a bunch of free users and you're showing that they're sticky, that they're using your app, even if you're giving it away for free, then that's an obvious exception. But for the most part, with most startups that we see, and we literally actually get funding requests for 1,000 startups a week here at Seven Figures Funding. And that's what we're seeing is kind of that deciding factor is generating sales, getting proof of concept that your product has a place in the marketplace. And then, not only does it have a place, but you're in a market where the opportunity is big enough that you can absolutely grow and scale.
So Leo, this is all great stuff. But I do know that Angel Capital Association, the consortium that tries to corral all the angel numbers together on people who invest in startups, says that the fail rate for funded angel investments is still 50%. And then, about another 35%, you may get your money back. It's kind of a push. So all the big money is made in a small number of programs. So how do you decide when you invest at Start Seven funding? How do you do that?
Great question. So we're more of a marketplace of different funding options out there, and one of our go-tos in making kind of those decisions is a gentleman by the name of Gregory Shepard. And Gregory's had 14 exits, and he's got a pretty large VC firm that he runs. And so what we do is we kind of act as an underwriter where we have all these different funding resources, and we'll underwrite the startup, and those that kind of fit the mold, we will place, at a Kickstarter or, Gregory Shepard's Boss Capital Partners firm or other, number of other groups out there that we do underwriting for. And those are the things they're looking for, right? They're looking for the proof of concept. They're looking for sales. And I'll take it a step further. A lot of them, so I'll give you an example. There was a recent group that put together an application to make public transit easier for those who were, utilizing bus services across the country. And these guys, there was two partners, and they had an app, they had some traction, and they had actually done some creative financing themselves. They took out home equity lines of credit, took that money, put it into the business. Like, they had real skin in the game, Brian. They weren't just, oh, I'm not going to risk my own capital. I'm not going to risk my own credit. I expect the investors to put all the risk on them. And that is so attractive right now to an investor. Better look at the entrepreneur, the entrepreneur owners, and say, wow, these guys have real skin in the game. Yes, they've got sales. Yes, they've got traction, and they've also got their own money and credit on the table saying, I believe 100% of my business. I'm willing to take some risks. And it worked out really well when they had a very, decent 8-figure exit, and they had it within 2 years. And that's why they were selected, because they had that skin in the game.
Nice. So I guess if you want people to invest, but you're not willing to invest yourself, you don't believe it enough. Is that right?
100%. And I say that to every business owner that comes to me, every startup who's like, yeah, I need 5.5 million for this and 4.4 million for this. And you have no sales and you have no traction, and you don't have, proof of concept at all. And you haven't invested a dime into this other than maybe a few hours of working on it yourself. And then you want the investor to take on all that risk. And that's just not attractive. But whereas you compare it with the small percentage that have used creative financing, that have put their 401k into, the business or the technology that they're investing in to grow and get it to that proof of concept point, that's so much more attractive, because you've got you've taken a risk yourself. And if you're not willing to take a risk on yourself in your own business, why in the world should an investor?
Right. So you've been doing this for about how many years now, Leo, with 7 figures?
So 7 figures, we started in 2018, but I've been in the industry over a decade. And a lot of what we do is kind of helping out with some of the creative financing to get you to the point where you are a great candidate for venture capital and private equity. And so at 7 Figures Funding, you'll see hundreds of 5-star reviews from startups and small business owners across the country. That's what we focus on. How can we get you some tools, some expertise, some education? Let's start building the business's credit score and be able to get financing in the name of the business using creative financing tools. Let's get you traction. Let's get you sales. Let's get you to a point where you're a much more attractive candidate to be able to lock in that big round of funding, whether it's the seed round, the angel round, or the Series A or B. And that's really what's attractive to the investors that we're seeing right now. And there's a big transition we've seen in the last 12 months with that.
Leo, you talked a little bit about making them more attractive. So do you find that a lot of the entrepreneurs, they may have a good idea, but they have no idea how to organize it, or a company and all the details? Is that Is that really what like, the biggest issue is? Like, how do you get it together?
Yeah, that's certainly a big issue, and some of it is a lot of it is people, right?
Right.
It's building a team, whether it's two, three, four, five people, and having them to buy in as well, and take a lot of their compensation on the back end and in future equity, and bring their expertise and have that vision. And of course, nowadays it's almost a mission driven thing, right? That you've got this product or service that serves a certain constituent, a certain industry, a certain niche, and it's absolutely focused on knowing who your customer is. So I think as much as organization and all of those things are important, like who is your avatar? Who is your dream client that you're attracting to? Because if you're going into this and you have an idea, you have a product, you have a service, you have an app, you have technology, and you're not defined in who you're serving, that's a big issue, right? Every
Yeah.
startup, every entrepreneur has to be able to identify and say, who is your avatar? Who's your dream client? For example, I'll tell you who ours is. Ours is 35-year-old, generally male. I call him Bob. Bob
Okay.
has two kids. He's got a wife. He's got this job that he hates. He's got this side hustle entrepreneurial venture that he's working on the side with, and he needs support. He needs some creative financing to be able to get to that big round of funding, and he needs some sales, and he needs some traction and proof of concept in his product. And so we know who Bob is. We know what his worries are, what keeps him up at night, and that's who we are serving. And so every decision we make at Seven Figures Funding is, how can we help Bob? How can we get another tool in Bob's hands to help him grow, to help him, take the risk himself to become a great candidate for funding and financing to grow in the future? And so that's how we look at it, and that's what we like to see with the startup founder, right? The startup founder, the team, they're well defined in who they're serving, in who their niche is, and who their dream client is, and that the market's big enough to support some growth and scale with it.
Nice. Now you mentioned in some of the notes that you funded about 500,000 in funding to startups. Is that right? Is that a correct number?
Yeah, it's about half a billion, so a little over $500 million in
500
funding
million.
for startups. Yeah.
Okay.
Yeah, and so
So,
a lot of that has been a mixture of creative financing, some angels, some VC, but a lot of it is literally, I think, and I think any VC firm would tell you this, or angel firm would tell you this, is you might look at dozens and dozens of deals, and you only select 1 out of 50 or 1 out of 100 to actually finance. So there's a whole collection of entrepreneur startups who are not able to get to that point, and they don't understand why. And that's where we really step in, fill those gaps, maybe get them some creative financing to get started. I always love to share the story of Kevin Plank, who's the founder of Under Armour, and just an amazing story where, he's in college, he's a walk-on college football player for the University of Maryland. He has this great idea about this unique fabric that doesn't take in sweat and moisture like a lot of the different factors out there. And so what he does is he uses creative financing to go ahead and get off the ground. And the way he does that is by actually utilizing credit, right? He actually utilizes about 4 or 5 different credit cards. And most people would say, wow, that's crazy. I can't believe he would do that he would take that kind of risk. But that's what made him so attractive. And then not only did he do that, but before he actually took out that big venture round of funding, he also was taking additional loans. And because he had so much credibility, and he still wasn't very profitable really at all, but that was when the VC firm stepped in and, okay, here's a round of funding at 10, 15, 20, et cetera. And now it's a multi-billion-dollar company. He's a multi-billionaire himself. And it's because, again, we just have this belief that if you'll take the risk yourself, grow your company just a little bit, you become so much more attracted to take that next step.
sure, absolutely. So you said 500 million. So are you a billionaire yourself, or is this money from other venture organizations or other groups?
These are all funding sources. I am not a billionaire myself, but we are a funding marketplace of different options. And
Okay.
so within our marketplace, we literally have hundreds of different options. And so when a startup or a business owner comes in, we underwrite them. We know which industry they're in. Also, region plays a big part of it. Where you're located regionally,
Right.
there are a lot of different sources that, hey, I want to work in this region with this type of business in this type of industry. So it's really that marketplace knowledge of knowing where to place a business owner or startup and entrepreneur where they're going to actually have the best chance of getting funded.
So you're in the Silicon Slopes, which is that Salt Lake and then Park City area, or where is
It
that?
is, it is. And in fact, it's even just about 30 minutes south of Salt Lake City in a city called Lehigh. And kind of
Okay.
that Lehigh area there, about 30 minutes south of the Salt Lake City airport. There's a number of unicorn companies very close here. You've got Qualtrics, the owner of the new owner of the Utah Jazz, Ryan Smith, who he and his family founded Qualtrics. Domo's another one. You've got Ancestry.com, which is a huge one about a few blocks away from my house and office. And so just a number of different, fascinating, mostly software based, unicorns out there. And that's another thing I would say is if you do have something that's software based, obviously, or even fintech based, we're seeing literally about 40% of the unicorns that are coming out across the country mostly are kind of in that fintech space. And if they're not fintech, they're definitely software based. So those are the things, those proprietary softwares or fintech softwares are where we're seeing a lot of growth right now.
So you talk a lot about software, and of course, in your territory, you mentioned it's mostly software. Do you fund other companies besides technology, like consumer services, business services, and other?
We do, and we have, kind of for the business owner that isn't quite ready, isn't quite in that position to qualify for, the seed round or the Series A, where we'll get them a business line of credit, we'll get them a business loan. We've got some unique SBA products that we'll connect them up with to kind of set the stage and build that foundation of financing, and then position them to where they're able to take that next step. In a lot of cases now, their valuation ends up being higher because they were able to use some creative financing to kind of get to that point. So yeah, if someone's not in a high growth industry and they thought they were a great candidate, for angel investing, but they're really not for a lot of different reasons, then that's where we'll still have a financing solution for them right now, even pre-revenue.
So I mentioned some of the metrics of the Angel Capital record that have been pretty much stayed the same over the years. So how is your hit rate as far as investing? So folks know that if you get funded by seven figures, there's a greater chance you'll succeed because of what? If that's true, what would it be?
Great question. The reason why there's a much greater odds of them receiving funding with us is because I always kind of liken it to, if you are accused of a really bad crime and there's a chance you're going to do serious jail time and you're like, I'm completely innocent, you have two options, right? You can go and you can represent yourself in a court of law and try and figure everything else and Google, all the different legal laws out there and how to make your case. And you can absolutely go and defend yourself, or you can find an advocate who's already been there, done that, and help 100 different people to the resolution they want without going to jail for something they didn't commit. And that advocate gives you a significantly better chance of success. And it's similar, obviously, in the medical industry, same thing. You can try and figure it out on WebMD, or you can get a great medical professional who's seen it, done it, and helped hundreds or thousands of people. And it's the same thing with a funding advocate. We consider ourselves a funding marketplace advocate where we've seen it, we've done it. We know where your best options are, where your type of business fits in, what your different options are. Are you a candidate for, VC funding and angel investing, that seed round, or do we need to get some creative financing and take a few steps first before we become that type of candidate? And then if you are a great candidate, well, which fund actually wants to work with you, right? Which fund actually likes that specific type of industry, because there are very dialed in funds out there, and Anderson and Horowitz is very focused on who they want to serve versus, Boss Capital Partners versus Kickstarter. There's all these different, options out there. And if you go to the wrong one, then you waste an awful lot of time and money, lose momentum, lose confidence. And that's where we know in this game, it's all about odds, Brian. If I can put more odds in my favor, my
Right.
chances of success increase. But if I don't have the odds in my favor, then I'm really just looking for a needle in a haystack.
So you mentioned a lot of well-known funding companies and venture capital groups. So how do you work, Leo? Do you screen potential companies and then go to them and then get a participation in it, or do you invest some yourself and then bring them in, or how does that whole process work?
Yeah, great question. Yeah. We do invest in special cases. It's not often, but we do invest, or we'll even lend our own money out. It's not always an equity situation. Sometimes we really like a business and their entrepreneur and their model, and maybe for now the different VC firms aren't a good fit. The different angel investors aren't able to give them enough capital. If we like it, we'll give them a multi-six-figure loan, and they'll pay it back, and we'll just take interest. If it's really something where it makes sense to look at an equity position, we'll certainly do that. But a lot of the times we'll also just have a one-time funding success fee that comes out of the money and capital that we secure them of just a few percentage points. And a lot of the time that's how we actually operate. So we're not, in most cases, we're not taking equity. We'll just get the capital, get the financing in place for them, and then just have a one-time funding success fee. We don't have any retainer fees. The only way we make money at our firm is by actually getting the entrepreneur funds.
Excellent. So we have a lot of good-hearted Americans listening to this, investors in all different walks of life. What does it take to become an entrepreneur? Before they approach you, what do they really have to do? Like, they just have an idea and come up with a company, essentially, right? Or can you give some guidance on that?
Yeah, and this is super important. And there's an aspect of self-awareness that it takes to be an entrepreneur, right? You look at different entrepreneurs out there, and sometimes they're trying to be a number one, they're trying to be a founder entrepreneur, but they're not, right? They're actually a 4 or a 5 or the 10th employee, or they're a really good COO, or they're a really good CTO, and they aren't really. There's no way that they might be a genius. For example, one of my friends here is one of the co-founders of Lucid. And Lucid's in that unicorn status, and Ben had this great idea, but he wasn't like the charismatic, kind of like Steve Jobs and Wozniak. He was kind of had a great mind for technology, but he knew like his strong suit was not going to be to build a team. It was not going to be able to pitch to investors. And so as I was talking to him, he brought in another guy who had experience at Google, who was that charismatic leader, organizer type. He focused on just building out the product and the tech. And then he brought in really this guy who would act more as the number one. He still got equity in the company. He's done extremely well. I think they're up to 500 employees and a huge valuation now, and able to secure successfully multiple rounds of funding, including from Google Ventures. And so I think just a great, first off, know who you are, right? If you're not that one, bring in a partner, bring in somebody who is. If you're not a one, bring in a 3 or 4. But if you are the one, okay, great. It's on you to organize. It's on you to bring in a team, and you have to be able to sell. What made Steve Jobs so good is he could sell that dream and that vision. And then with the dream and vision, then the product behind it came along. So half of it is the dream and vision. The other half is a product. And then it's the ability to pivot, right? In the lean startup, the author talks very quickly about you start with one idea, and then as the entrepreneur, you have to be able to pivot and find what does the market really want. You look at Jack Dorsey and the co-founders of Twitter. And Twitter started out completely different. And then when they started getting traction, having these little tweets and messages people were putting out to the public, they're like, oh, that's what the market wants. So that's what's key, is being able to identify, what is the market telling me, right? I had this business law professor in college, and he was talking about, what is the case telling you? And he talked about this case where there was this bridge and these two people got in an accident and people passed away, and oh, who's to blame? Oh, this guy was a bad driver, this guy was a bad driver. But the case was telling them, no, it was actually the bridge itself. The government messed up on the bridge and made it too small. The government was liable. So in the marketplace, what is the market telling you? What does the market want? And when you listen to what your customers are telling you, they'll tell you what they actually want, what the market actually wants, and that it's your job as the entrepreneur to be able to figure that out. And once you figure out what the market wants, now it's okay. How can we put in the right team? How can we create sales funnels and processes and systems and CRMs? You've got to have a dynamite CRM. Everything, whether you use Salesforce or Zoho, which I consider to be the two top CRMs today, that's how you grow and scale the business, right? If you don't have automated texts and emails and one stage and status, and understanding the entire sales process, or what it takes to make a sticky product, a sticky app that your users are coming back for, and that onboarding process in the first 7 days has got to be so dialed in, and you're constantly tweaking and testing and iterating until you figure it out. Those are all the aspects that it takes to be a successful entrepreneur. That ability to pivot to what the market wants, the ability to create a team and systems and processes within a CRM with automation in place to be able to grow and scale. Because if you have a model, if I can put $1 in and bring $2 out, or at least another dollar, that's what every investor is looking for, right? The ability to grow, take market share. I can infuse a few $1 million in here, and you can go from a small market share to this market share, or to this many users to this many, and really grow and scale. And that's what they're looking for, right? You've got a model that works, a proof of concept, even at a small level. It's like, okay, great. I can put 10 million or 15 or $20 million in here, and you can go from having 1,000 customers to 25,000 customers, and now a much higher valuation. And so if you can think, I always say you need to be able to think like an investor, right? What if you were an investor, what would it take for you to be excited to make that investment? And once you understand that, now you can get to that level.
This is great advice, Leo. And now you were at University of Utah. Are you also a professor or an instructor at University of Utah as well?
I am not. I did receive multiple scholarships there at the University of Utah. My entire family's gone there. In fact, I'm the oldest of 9 kids, and my mom was. Every kid did get a scholarship, and my youngest brother is now on scholarship at Stanford, actually. But what we do have is we've created different education platforms on accelerating your growth. We have a platform called the 7 Figures Accelerator to accelerate your growth to 7 figures. And when you have that type of traction and growth, it's so much easier to get that big next round of funding. And so we give those away for free to any of our clients that we get funding with.
So if someone wanted to learn, can they check out your website? I know you have a podcast and certainly you offer advice on the podcast, but can they learn more from your network on how to become an entrepreneur, be that person as the right person, not the CIO or the CTO, but the CEO and leader or founder? Can they learn from you?
Absolutely. If you go to 7 Figures, just the digit 7, then figures.com. We've got a lot of free content, all of our podcast episodes, access to our 7 Figures Accelerator is right there. And then it's 7figuresfunding.com. Again, just the digit 7 and then figuresfunding.com. You can start looking at free pre-approval options based on debt financing, and then also based on angel investment financing, what your options are there. And we do that, of course, free of charge. The only way we make money at our marketplace is by placing you where you actually receive funds and financing.
Excellent. So, Leo, this all sounds great, right? And everyone's going to be a unicorn and make a lot of money. Isn't it hard work? I mean, don't a lot of entrepreneurs fail?
100% they do. And if you come out there and you think you're going to get away with 40-hour work weeks and that you're going to make a go of it, you're very mistaken. And society and the media tell us we need to live these perfectly balanced lives. Well, I got news for you. Every successful entrepreneur I know, and in my own experience, at least for the first few years, you're going to have to put in 60, 70, 80-hour weeks. And you need to work on your business every single day, because guess what? If you're not, that guy or gal, in the same industry competing for the same market, they are. And if you're not, you're going to fall behind. Now, once you get to a certain point and you get the funds, now it's putting, it's leveraging a team and technology, right? How much can you create systems and processes and automation? How can you bring in the right person who has the right drive to drive your sales team, to drive your technology, to drive your operations, and really place those people? But even as you're doing all that, you'll find out, like even when you're on vacation, there's always something to follow up. Communication with your team is vital. I always recommend that, startups are using Slack and able to communicate in different channels and individually with your team and have those touch points. But yeah, I just haven't seen it where you can do the Tim Ferriss 4-hour work week and build a startup that succeeds.
You're gonna have to work your tail off, is what we're saying here. But a lot of folks are up for that. So, but it's not an easy.
It's worth it. It's worth it. At the end of the day, when you're old and on your deathbed and you think about your life, you're going to regret the things you didn't do. You'll regret that startup and that business that you didn't start, where you could have created real change, real legacy, a product or service that made the world a better place and create absolute, legacy and wealth for your family. That's what most people think about at the end of their lives. Not the things they did, the things they didn't do.
So, wow. Well, this is great. Well, thanks, Leo. And thanks for being there for entrepreneurs and investors. I know there's lots of angel groups out there, lots of groups that claim to have funding, but they're not really counseling and helping. And it sounds like you're providing a level of involvement that a lot of organizations aren't, which is really pretty neat. So thanks for doing that. And is there any last message you'd like to give the investor class who might become entrepreneurs? Is there anything else that we missed?
Absolutely. Everybody who's listening right now, think about one thing you can do today to make your dream closer to a reality. One thing that you can improve on your investor deck. One thing you can improve with your sales, with getting that proof of concept. One person who can make the difference if you've been thinking about talking to them, asking them to join your team, because a lot of the times it starts out as a side hustle, right? You might still have your full-time job where you're working 40 hours a week. You might have a family and 2 kids like my avatar Bob does, and you're trying to figure out how this works. Well, how it works is from 9 p.m. to midnight after you put the kids to bed. That's when you work on your business. On the weekends, when everybody's messing around or they're streaming, Netflix, you're working on growing your business, getting that proof of concept. That's what's so great about the world we live in. Like back in the 80s and 90s, it wasn't so easy to work nights and weekends to grow your dream entrepreneurial startup business, but you can do that in 2022, and the opportunity has never been greater.
So we want to put a call out there to all the potential entrepreneurs that you can do it, and you can step up to the plate, come up with an idea, come up with a way to develop it, to fund it, have people pay you for that good or service, whatever it is you're trying to do. And there's plenty of folks out there like you, Leo, that could give them guidance. So again, let's look for 7 Figures. Is it 7figures.com? And then also the 7 Figures podcast, get plenty of advice on how to do this from Leo. And we really appreciate your being there today and for being with us today on the Today's Market Explained podcast, Leo.
Absolute pleasure, Brian.
All right. We'll leave it there. Thanks everybody for being with us again on today's Market Explained, and we will be back very soon with another great podcast. We'll do a market commentary next, and then we'll meet some other fascinating people like Leo. And good luck to all the entrepreneurs out there. Go get them.